All right. I think people, they take a good thing and just kind of make it a little bit ridiculous. And part of this is because, in my opinion, one of the greatest CEOs, one of the greatest stock pickers, arguably the greatest stock picker, has been Warren Buffett. And he took Berkshire Hathaway, as everybody knows, from 1965 until today, has made many millionaires, has just created billions. Just the percentage gain that he's done is just like,
You're tuned in to the Investing for Beginners podcast. The show for the long-term investor. We cut through the noise to focus on what works. Compounding, discipline, and the conviction to buy wonderful businesses and stick with them. Your path to financial freedom starts now.
Welcome back to the Investing for Beginners podcast, everybody. My name is Stephen Morris, and across the way is Andrew Sather, the Hare, as we like to call him. Not really, but I think that's a nickname I'm going to give him, and it's going to stick. What do you think, Andrew? Are you okay with being called the Hare? I feel like you
know, I used to be the Hare.
Really? I did not know that.
I thought I told you.
No? You've never told me that you used to have a nickname, the Hare.
Okay, my AIM screen name, and now this is embarrassing because now the whole world knows. Like, this was just me and a few people's secret. My AIM screen name has the Hair.
No way.
Yeah.
It was just like an icebreaker joke because I'm nervous. Oh, that's awesome. All right, everybody. Roping it back in. We have actually an interesting thing we're going to talk about today. Andrew has an opinion that I think is going to be fun. And that is that he thinks Wall Street overly obsesses over the CEO. I think I'm going to disagree with him, but we're going to find out. I'm not entirely sure. But before we dive into that, I just want to give a little bit of background. And that is, if you listen to the last episode, I'm a military guy. And so leadership is, to me, the pinnacle. And the general is the single most important thing to protect. And so when Andrew says the CEO is overrated, or at least overrated as far as Wall Street's concerned, I'm like, ceasefire. Let's talk about that because I'm not sure. So Andrew, just give us a brief description, if you will, of how you came to this conclusion.
I don't know. Maybe it's just cranky guy being cranky and yelling at people on the lawn. Because
Gran Torino. Yeah, love it.
In some way, I kind of want to be that way when I'm older. In some way, definitely, I'll take the car.
Oh, that car was awesome, 100%.
So all right. I think people, they take a good thing and just kind of make it a little bit ridiculous. And part of this is because, in my opinion, one of the greatest CEOs, one of the greatest stock pickers, arguably the greatest stock picker, has been Warren Buffett. And he took Berkshire Hathaway, as everybody knows, from 1965 until today, has made many millionaires, has just created billions. Just the percentage gain that he's done is just like, there's not enough commas, it almost feels like. And so I think people look at him as like the pinnacle, not people, investors, Wall Street people who are picking stocks. They look at Warren Buffett as the pinnacle of CEOs. And he always talked about how capital allocators are so important and how capital allocation is a CEO's number one job. And while you can definitely find examples of that being the case, and maybe the best of the best companies do operate that way, I think for the majority of investments, for the majority of stocks, I really think it's not as big of a thing as people make it out to be. If it's on the spectrum and there's like, okay, this is the ultimate importance, and then, okay, this is like a checkbox of like, okay, I'm just trying to make sure there's no CEO red flags. I lean personally more towards the make sure there's no red flags than do I believe that this superstar CEO is the only thing that matters.
Initially, when you suggested this topic, I instantly thought CEO and I thought leader.
Mhm.
It sounds like to me like you're thinking CEO administrator.
Mm, I don't know about administrator per se. Like I've noticed, okay, there's some companies out there. Um, I don't want to name names, but like there's a couple in like my portfolio where the CEO is more like COO almost,
Mm-hmm.
and then the actual person who is making what most traditional CEOs would do, like, okay, we're going to go out and buy that company or buy this company. Like that's like chairman of the board kind of person. And the reason why I say that uh, is because they're the ones answering the questions when analysts ask, "Oh, why did you guys buy this company?" And then instead of the CEO answering the question, it's the chairman. Or there might be another company like where the CFO is kind of answering those capital allocation questions.
Mm-hmm.
So yeah, I guess maybe administrator, maybe allocator is the better word.
Okay.
Where I am talking about what I've noticed, and there's a lot of great books. Like if you want to like dive into the weeds, I think The Outsiders is a great book to read about capital allocation. But I just think capital allocation is so overvalued by Wall Street people because there are so many examples of capital allocation gone wrong.
Mm-hmm.
But just because you're a good capital allocator doesn't mean you're going to have a great company. And I think Warren Buffett is the exception to the rule because his float gives him all this capital to allocate. But like the CEO of like a shoe company is not going to have all this float to allocate. They have to buy inventory and things like that. So I don't know if that answers your question, but
Yeah, it totally does. And just for clarity, in case we have a new listener or someone that hasn't been around long enough to fully understand, could you just in your own words define what capital allocation actually means?
yeah, it's a great question. So companies make profits, hopefully, and they have five main uses that they can do with the capital. So you can reinvest in the business. You can give the money back to the owners through dividends or buybacks. You can use it to buy another company, another business, and that makes the whole business bigger. Um, there's a couple other uses, but I don't have it pulled up right now. But that's capital allocation is like we're trying to figure out what are we going to do with the profits we made so that this company can continue to grow and the stock price can continue to go higher.
And what did Warren Buffett do that made him? And I know you like that's a long laundry list. Just off like your top three. What are your top three? Like that was just so brilliant that he did that.
Yeah, he bought Geico straight up, was like, I want Geico. And we all know Geico. We all see the commercials, Green Gecko
Mm-hmm.
guy, like great business. And like that company has had a moat since day one and being an insurance business. So not only was it a great company that grew massively, they also just were flush with cash because of the float. So it was brilliant in many regards. Buying Coca-Cola stock back in 1987, he loaded up. Can't remember what the exact percentage was, but he's like, "We're betting the company on Coca-Cola," and that was freaking brilliant. And then he did the same thing with Apple, and he did it with Apple in 2014, 2013 ish. And what made that so brilliant, and there, again, all of these are so brilliant for so many ways, but for Apple in particular, he was on the record for many years, said publicly, I will never touch technology. I will never touch technology. And then he goes and bets the company on a tech company that everybody else was saying Apple is technology. It's a hardware company. Everybody knows hardware prices go down. Hardware is a commodity. Look at the PCs. Look at all these hardware, blah, blah, blah. But he saw, no, Apple's not a hardware company. It's something else. It's special. And that has just paid off for shareholders in so many ways. We could pull up the numbers and the millions, billions that comes in because of those three decisions. Yeah, massive.
I love how you said it initially in the beginning. Like there's not enough commas to express just how valuable what Warren Buffett did for all of us. Even if we didn't make money off of him directly, um, just the knowledge that he's openly shared with all of us to go consume is yeah. There's not enough commas. The amount of lives he's touched, it's got to be. I don't even know the number that if numbers go that high. I'm sure they do. But you know what I mean?
Yeah, I'd love to find out. That sounds like a fun day project for me.
That doesn't sound like a fun project at all. You go have fun with all of that nonsense. But no, I love that, and I think I wonder what it has he ever directly said what it was about Apple? Because when I think of Apple, like you're like, oh, it's a hardware company, and then people are like, no, it's this. When I think of Apple, I think of community, like because you have those diehard Apple heads, like they have built a brand that is just diehard. Never, and I understand it because I'm one of them. Like, and I bagged on Apple for years and years and years. I had a Windows phone. Oh, God, that was atrocious.
Ew. Wow.
Yeah, it was horrible. I was so excited and it was horrible. It was,
You have always been the early adopter for things. You just have to try
not
it,
me.
right?
Not
No?
me. I hated
Okay.
Apple. And it was that it was so hard. It seemed like it was so hard to adopt because the operating system's completely different.
Right.
And it was a bit of a struggle, especially when I went from PC to Mac. But I quickly realized, like, man, the integrations, the stuff, the speed, it's just so easy to use once you get used to it. And now I'm like the obnoxious Apple guy. I've turned into that, and I hate myself for it. It's like, oh, like what have I done? What have I become? But no, I mean, I wonder if he realized what Apple was building, and I don't know. Has he ever talked about that you know of?
I don't. He's kind of hinted like here and there, saying things like how he sees it more like a consumer brand. So he looks past the tech and sees just how. I think he told a story about how his kids were all on their iPhones during a lunch or something like that. But it's, I don't know. I like to think that maybe he was left out of a family group chat or something because of his green bubble. That's why, actually, I don't know if you knew I used to be an Android person. And
I didn't.
Kim, it was funny. Like Kim and I were just talking about this the other night. She was reminding me how I was a green bubble. And she said when we met, she noticed I was a green bubble. And she was like, yeah, he doesn't have a chance. Like this guy has no chance. And I did not switch to blue because of her. It is because my family left me out of a group chat. But Apple has done, obviously it's been way more than just green and blue. Just the things that they have created and the way people love their phones. I guess you could argue you buy Apple stock for iPhone, you buy Google stock for Android. You don't have to pick between one or the other. The fact remains you're investing in smartphones. And I think we can all understand just how much people love their phones and why that could be a great investment.
Yeah, awesome. I agree. And so when you think of you talked about almost comparing or Warren Buffett being the measuring stick, if you will, that Wall Street measures other CEOs against. And I'm not even going to try to say his name because I always butcher it, but Microsoft CEO would definitely be one I would think. Obviously, not Warren Buffett anywhere close, but he's definitely someone that has met the mark, I guess you could say, as being a good CEO. But then there are other CEOs. What's the guy's name that I used to beat up on Dave about? I can't even remember.
Darcy.
Yeah, block. And I don't actually care. It's just Dave was so strongly against him that I just every chance I could poke the bear. Um, you know, yeah, Jack Dorsey, like just burning and burning more capital, as
Mhm,
Dave would describe it.
mhm.
Um, do you think that that's a fair way to measure a CEO, or do you think like as you were saying, like it's CEOs are a bit overrated? But I mean, he set the standard. The standard is the standard for a reason. So, do you think it's a fair measurement?
Yeah. I mean, I do think it's a great measurement. So I see what you're saying. Like CEOs who burn capital should definitely be held accountable,
Mhm.
and they should understand that not only are they're ruining it for everybody. They're ruining it for the company. They're ruining it for employees. They're ruining it for shareholders. It's going to trickle down to customers. It needs to be held to accountability. You know how I like to look at the stock market. I like to look in things as probabilities. And when I build a portfolio of stocks, I want them to have the best odds, basically. I don't know which one's going to pop off, but I just want enough of the winners in my camp so I know at least a couple of them will carry the portfolio. Because of that, I think for me as an investor trying to decide whether is this guy Warren Buffett or is he the other antidote to Warren Buffett, that's not like a worthwhile experiment to me because I don't think I could have spotted Warren Buffett in 1965 and said, yeah, that's the guy. Maybe I could have. Maybe I could have. But I have noticed like there's other CEOs who talk like Buffett does, and they say all the right things, and some of them do have good track records, but some of them don't. And so it's like it is a hard game to play. Like, oh, I'm going to evaluate this CEO. I don't like that CEO. I'm not going to invest, or I like the CEO. I'm going to invest. I think it should be a factor. It's just one of my pet peeves is I think it's an overrated factor, and I think you take a company like a Coca-Cola. I think the bigger and the more mature a company gets, the less of an impact a capital allocator will have. Um, a good capital allocator, like the benefit of being a good capital allocator, reduces the bigger and the more mature businesses. Um, and so I forgot where I was going with that, but that's kind of that's kind of like my hot take, I guess.
I mean, that's fine because I totally butchered the question, but you still understood it. So, thank you. Um, when it comes, so you were talking like it's more important to you to find red flags
Mhm.
in a CEO's personality. Uh, what would some of those red flags like instantly be for you? So, um, you know, obviously burning through cash is one.
Mhm.
Um, but is like having a strong, weird, outspoken personality. Is that would that be a red flag to you, or would uh, you know? I mean, we've seen CEOs in the past who don't have the cleanest record, if you will. Is
Mhm.
that something you pay attention to? Um, do you try to find like do they have a specific moral compass or moral fiber type thing? Well, like what is it exactly you're looking for?
I try to look at everything as factual as I can, and then I don't want a CEO who's just gonna brush off the bad or the threats. You know, one of the things that we've learned, Caden Christensen has written a book about this. And if you've been an investor for any amount of time, you already know this, but there's a book called The Innovator's Dilemma. And it talks about how, especially in technology, the up and coming companies are almost designed to take the market share from the companies who've been around for a while. So if I'm listening to a CEO and they're completely brushing off the threat of whatever technology is obviously around the corner, like I don't like I think Progressive Corporation CEO is a great example of somebody who did this very well. So I own Progressive Insurance. It's been a great investment for us. Continues to grow like 15% a year. They're absolutely killing it. They're just when you talk about best in class in the insurance industry, I feel like Progressive Insurance should be up there every single time. And an analyst asked Trisha is her nickname, but she's the CEO, asked Trisha about autonomous vehicles and like how do you think about the threat of autonomous driving and all of that? And I thought her answer was very measured. It was thoughtful, and she didn't make any like crazy confident guarantees, but she also didn't sound like she was like they weren't preparing for it. So like I liked the way she answered it, and that gave me confidence as an investor. She sees the potential threat. She's not overreacting to the potential threat, but she sees it. They're taking measured action, and she's also not brushing it off. Like there are CEOs, you'll hear them just kind of, if she laughed about the threat of autonomous vehicles, I think that would potentially be a red flag in a CEO, but she didn't do that. So that's the kind of thing for me, like in the squishy skill of trying to figure out if a CEO is going to be good for your portfolio or not. That's one of the things I look for.
No, I think that's. I need to go back and read what her answer is because I'm actually really curious
Yeah,
to
that's
her
good.
answer to the question because that is a very valid question.
Mm-hmm.
Um, you know the and I could totally be wrong, and then if I am wrong, please correct me. Uh, I feel like Wall Street loves a visionary far more than operational.
Yeah. Oh yeah. 100%.
But one of the and while I would never say that Warren Buffett was not a visionary, I feel like his operational expertise far outweighed his visionary
Mm-hmm.
um, acumen, I guess. So, do you agree with the operations side of what a CEO does is undervalued compared to the visionary side?
Yeah. I hate to say like something we've been saying for a long time. It depends.
Yeah,
But really, like the life cycle of a business is really going to determine, I think, what skill set works in what life of a company. So the younger a company is, the more in growth mode it is. I think the visionary is very, very key. And then as you scale up and you get to a size where, okay, we're not trying to build the next big thing, we're just trying to steward what's already been built, then I actually think a visionary in that case can do a lot more harm than good. And we've seen it. We've seen guys like Steve Jobs back in the days of Apple. He got booted from his own company, and he don't know what he did. I know he like started Pixar and then came back to Apple and actually helped Apple with a turnaround story. And then when they handed the reins to Tim Cook, who's very operational, it was Tim Cook right up there with Warren Buffett. Tim Cook was the operations guy to lead Apple to become such a wonderful investment that it was for Warren Buffett. So I don't know, like did Steve Jobs learn some operational things to kind of balance out his visionary tendencies when he revived Apple? That's a hard question to answer, but I do think to try to answer your question, I think the visionary matters more the younger the company is, but the operational matters more when we're talking about big companies. And because of the type of investing we like to do, where it's going to be safe, we know like if we need the money, it's there, right? For the most part, we can sell. Um, then yeah, I think it would be very, you have to be very careful with certain CEOs. And honestly, that's what's kept me from companies, some of the biggest companies that are out there now with like wild growth stories, some of the best stocks that we've seen, Nvidia, Tesla, even Amazon. I think they're like the visionary needs to at some point turn into something more matured. Cause like how much more, once you've taken over a market, how much more of that market can you take? And then you just have to start over and do it again. But when you're a certain size, like you can't just build an ice cream shop and then think that's going to help your grocery store empire. But a visionary kind of has to do that, right? So I don't know. I've been proven wrong so far on like Nvidia, Tesla, Amazon. But I do think at some point the visionary thinking needs to shift to something more operational, because I just don't see how it's sustainable to just keep grow at their size.
No, I think that's a very good point. And for me, and again, I am not the brilliant mind that you are, but for me, it's a lot of the visionary scares me because it's not been proven yet. You know, so a good example of that's Amazon. You know, I don't remember how many years, but it was over a decade where they were in the red. They weren't profitable for a long time. And then all of a sudden, it's one of the biggest companies in the world. Okay, so great story. In 2008, I think is when Tesla went public.
I'm not sure. Yeah, that sounds probably right.
Somewhere around there. And I had a giant signing bonus for re-enlisting, and I was
Uh-oh.
deployed at the time, so
Okay.
it was tax free as well. And I think it was $20,000, maybe 40. I think it was $20,000. And that's how bad this story ends, is because I don't even remember how much it was. But imagine if I had been smart and invested in Tesla when it IPO'd, that entire stack. Like,
Yeah.
bro, I would be like, you wouldn't even know who I am because I'd be rubbing shoulders with Elon right now on the board of Tesla, right? Like, but it's like that whole idea is just, you got to, like you said, you got to be super, super careful with the visionary, because it's hard to pick. It's almost like maybe not quite as risky as the IPO, but you gotta be 100% confident that your research is solid.
Did you ever hear of Nikola? I think, was it Nikola? There was a electric vehicle that went public. They hadn't sold a vehicle yet, but they went public, and the guy had like a great story about how this electric vehicle was going to take over and become like the next Tesla. And they IPO'd, and then it was just a disaster.
Yeah, I can't remember the name of it. Was it Nicola? I don't
You
think
know,
it was Nicola.
no,
I don't remember what it was, but I know what you're talking about, definitely.
yeah,
And if I remember correctly, they were pretty dope looking cars, like the concept cars. Like,
mm-hmm,
I remember
yeah,
them looking pretty cool.
yeah. It's it's tough because like I don't want to like dance on the grave of other people's dreams, but it's just the math. The math shows that, to your point, like it's very hard to pick out these visionaries ahead of time. Um, the numbers are against you, so uh, like you said, I guess make sure you've done your research, or just be okay with, hey, I'm going to ride or die with this visionary kind of thing.
Yeah, and to be perfectly clear, like, we're not, like Andrew said, we're not trying to dance on and even say that it's not a good idea. It's
Mm-hmm.
just, we're in the business of compounding our wealth, growing our wealth, and Warren Buffett's number one and number two rule are what?
Mm-hmm. Don't lose money. Don't forget rule number one. Yeah.
Exactly. And so, I mean, to us, it is these visionaries, while, you know, Jobs or Amazon, like whatever, like, it's great what they've done, and I love what they've done. And I look back and like, man, I wish I would have bought Tesla stock.
Yeah.
But one, I was young. Two, I was dumb. Um, I can't tell you where that money went. Um, but
Probably
it's
Monster.
just, huh?
Monster cans of Monster.
Probably. Well, yeah. We'll just leave it at Monster, sure. Um, but no, it's, you just got to be careful, because the last thing we want to happen is for you to have to start over. If you're I'm middle aged, I'm 40. Worst thing I can imagine is losing my portfolio and having to start over because I took an unnecessary risk.
Yeah.
Even though it might pay off, but I mean, man, the worst words in the world I've ever heard is, "I got a sure thing." Are there any green flags, like, if you see this CEO say or do? Or is there anything that you're like, oh man, yeah, totally, I'm sold?
Yeah. To a man with a hammer, everything looks like a nail, right? But I like to see high ROIC, which is short for return on invested capital. I like to see managers with good track records. And in transition, I like to see managers that carry on what's been started. So you don't know this yet because I'm still writing it. But for the March Value Spotlight issue, I wrote about how the CEO there has taken the previous CEO, who was more visionary type.
Mm-hmm.
He created a really cool vision for how this company was going to improve their technology. So he's taken that, added to it, and like maintained the same values that got them to success, and continued that forward. So I like to see that. That's something that came to mind that I saw, just in this week. Keeping what was there and then adding their own flavor to it. Um, Flavor being a hint. That was
Right.
a double for those of you who know what stock I'm talking about.
Is there a company that you own where you're like, I don't like the CEO, but I love the business and the CEO is whatever, he's not going to hurt it
Yeah.
or she?
I don't know if I want to say what the stock is. Like, yeah, the
Oh,
CEO
okay.
sucks.
Fair enough. Fair enough. You don't have to answer.
But I don't know. Like, so there's two right now that are like I'm watching them. Maybe I'm going to sell them, but I still think there's some juice left to squeeze there. And I think the business has just been in a great spot, and has a track, like a runway for continuing to grow. So I'm watching those. Um, Trying to think if there's others. Like there's companies where I don't worry too much about what the CEO does, and as long as you don't see like a huge cash, oh, we just spent $20 billion on this, as long as I don't see it, I honestly don't think about what the CEO is doing or even what their name is, because I know enough about the business that
Mhm.
everything's kind of going to be smooth sailing.
I'm more of the Crocs camp,
Yeah.
even though they're ugly. And I don't understand for a single second um, just how they got as big as they are, being as ugly as they are. I mean, I know
Yeah.
they're comfortable. Don't get me wrong. I wear my Crocs all the time, but it's just they're so ugly, dude. Like how? It doesn't make sense.
So you have a pair and you love them and you don't
Yeah,
understand why other people would have a pair.
exactly. Like it blows my
I'm with
mind,
you.
dude. It really
I'm with
does.
you.
I know that
Yeah.
doesn't make sense, but they're just so ugly. And I think
You
that's a
know,
great
go
vision,
ahead,
like
sorry.
a not visionary, I guess, lesson, but um, adaptation, I guess, evolving. Because I mean, Crocs can only go so far. Like you can only make an ugly, comfortable shoe so many ways,
Mm,
and rather than trying to reinvent what they're doing, they
mm,
just like, you know what? Our ugly shoes have these ugly holes. Let's make these
yeah.
ugly things to fit in those ugly holes.
Yeah.
And we've created an entire new market.
Yep.
And man, I think my Crocs are the only one that I've seen recently that don't have those on them. Yeah, I don't have anything on mine. And I know you do. You're an adopter of, what are they called?
The gibbets.
Huh?
Gibbets.
Gibbets. Such a,
Yeah.
again, like
And
it's so dumb, but
do you know how much they sell for too? Like if you go to a Crocs store to
mm,
buy one, no, it's like
uh,
$5 each, something like that.
what?
Yeah, for a little thing. And then a lot of people like to get like two, three, four of them. I think they sell them like 4 for $20 or 5 for $20 or something.
Yeah.
Like you spend a lot just on those to deck out your shoes.
Yeah. But I mean, it just, it's a great just example of what a visionary company can do, because it's like they realize like, okay, we've pretty much hit the ceiling of what our brand is. Like, how can we make it even better and
Well, what about
continue to grow?
AirPods?
Hmm?
What about AirPods?
What
Similar
about
thing, right?
AirPods?
Like they didn't know Apple pretty much tapped out smartphones. So they're like, okay, how can we continue to make money from an iPhone? They come up with AirPods, which work perfectly on iPhone and
Mhm.
become like your perfect accessory. Um, People don't think of Apple as like being innovative, but they've added AirPods, they've added Apple TV, they've added iCloud, all of these things, and it's like being visionary, kind of like you're saying, but without reinventing the wheel.
Awesome. So I think that's going to wrap us up. Do you have any final thoughts you want to throw out there, Andrew?
Well, I'm curious, did I sway you in one bit on the CEO being an overrated concept, or am I just off my rocker at this point?
I misunderstood.
Okay.
When you said it initially, I misunderstood what you were saying. Because like I said, my mind instantly went to they're the leader, like they have to, you know, steer the ship. But
Right.
when you broke it down, especially when you're like the visionary versus, the systems or not the operational, I think it just shows that much more how awesome Warren Buffett was as a
Mhm.
CEO, that he was able to switch from visionary to operation, back to visionary when he needed to, back to operate. Like he just seemed like to me, he just kind of fluidly switched between what he needed to when he needed to, and to make the most profit. So I apologize for misunderstanding you, I guess. But no, I think I agree with what you're saying. It's not what popped in my head when you initially said it. Does that make sense?
Yeah. Yeah, it makes a lot of sense. So what do you think the takeaway is for a beginner who's looking at stocks, CEOs, things like that? What's something tangible I can take away today?
I think for me, Andrew, is just don't buy into the hype.
Mm,
There are a lot of CEOs out there. I won't name names. Um, Electric cars. That's all I'll say. They're just very loud, very in front of the camera, very controversial. Um, and I definitely know people that will just buy a stock just because they like that person.
mm,
And from this conversation, I've definitely learned like that. That's not a solid strategy to be spending your money, especially if it's your retirement or your kids' college funds or things like that. Like you don't want to bet the house on a personality. You need to bet the house on things you can actually measure. So I think for the beginner, it's just you have like, sure, look at the CEO, that's fine. But at the end of the day, you really have to look at um, what can we take away from that CEO to learn more about the business rather than just the personality of the CEO. Does that make sense?
Oh yeah. Yeah, 100%. Yeah, be careful out there. Don't rely on CNBC.
And with that dropping of the dime, we're going to go ahead and wrap it up. Again, thank you so much for listening to this episode of Investing for Beginners. I am Stephen Morris. He is Andrew Sather. And we will look forward to seeing you next time. In the meantime, never, ever, ever forget, invest with a margin of safety. Emphasis on the safety. We'll see you all next time. Bye.
You've been listening to the Investing for Beginners podcast. All show notes can be found on our website at einvestingforbeginners.com. To master the basics of stocks in 7 days, sign up for our free email series at einvestingforbeginners.com/newsletter. Until next time, have a wonderful day. The The information contained is for general information and educational purposes only. It is not intended as a substitute for legal, commercial, and/or financial advice from a licensed professional. The hosts may own positions in the securities discussed. Review our full disclaimer at einvestingforbeginners.com.